Question 8. This is where we're really starting to think about not just concept about pricing, not just principles about pricing, but is right now. How has pricing changed? Because we're in this hopefully post-pandemic recovery period where business is moving forwards. The Bank of England has predicted huge growth rates in the next 12 months, over 7% growth rates, which is unheard of since certainly the end of the Second World War boom. So huge opportunity. How should we be pricing in this post-pandemic period? The reality is, it isn't really any different in my view. Buying behavior doesn't dramatically change over time. There might be very immediate issues. So for example, we talked about before, the day before payday and the day after payday will affect our buying decisions, but the principles of buying don't change. We as consumers behave in a very similar way. Some customers may be temporarily pushed down what we call the value curve. So how much are they prepared to pay for the quality or service they get, based on they have financial challenges. If they have no money in the bank, they make a very different buying decision than if they have money in the bank. But generally, we are all making a value for money decision based on all of those issues we talked about, all those 20 or 30 plus conscious and subconscious decision-making processes. We're all boiling that down to a value for money decision for us. And actually right now, that is more important. We're more concerned with value for money right now than we would normally be, because we've been through this really challenging period. So if you take your time to talk about all the other factors than price that are relevant to your customers, all the features and benefits, all the pros and cons, if your customer can understand all those issues, if the buyer can then make a decision on value for money with all those other factors taken into account, price is becoming just one of those factors that they need to talk about. If you panic, if you rush to win business, and some already are, the opportunities are definitely out there. There is a growth opportunity to go out there and hoover up business in most marketplaces right now. In that rush to win sales in this uncertain recovery period, you're just giving it away too cheaply, and you will grow quickly with low margins. And that's a problem. That's effectively what we always refer to as overtrading, going too quick on thin margins, running out of cash. So what should you do with your prices post-pandemic? I think you need to be very careful about lowering those to grow volume. What we need to be talking about is all the other reasons they should be buying from you that are more important than simply the pricing issue. So let's just put that into pictorial form. So on this diagram, you can see that the left-hand axis says customers' perceived value. This is what the customer, if we could read their minds, believes your products or services are worth. And then price point along the bottom axis that says, okay, 10 out of 10 is the highest price we could possibly charge. So if we're above the line, anywhere above the line is effectively saying that the value in the eyes of the customer is higher than the price point we're prepared to charge. And therefore we are underpriced. We're giving away value to the customer. If we're below the line, then our price point is higher than the value that we are effectively giving our customers. And we're overpriced. And we're just going to talk about the impact of being one side or the other. So the El Dorado, the promised land we're aiming for, is the optimum price point, is where we pushed our value. We've done absolutely the very best we can in all the bells, whistles, features, and service delivery and everything else. We've got the very best service we can, 10 out of 10 on value, and we're charging a price that reflects that. So we're 10 out of 10 on price. That is where everybody should be aiming for, because that's the most profitable place to be. Where do we find most businesses are currently? Most businesses tend to be a solid 7 or 8 out of 10 on service. They're doing a good job. Customers like what they do, but they don't quite have the confidence to charge a price that reflects that. So in this example, they are 8 out of 10 on value, but 6 out of 10 on price. They're above the line, they're underpriced. Where should we be? Well, again, if our value is 8 out of 10, we should be charging 8 out of 10. So our objective is to get our fair price to move the price point along so that we're getting 8 out of 10 on price to match our 8 out of 10 on value. Now that's what we typically do in most of the helium projects on pricing that we run, is we're trying to give our clients the skills, the understanding, the techniques, the language to move their price point along because they're already doing a great job. They're just not charging quite the right price that reflects that. And that goes back to that previous diagram. The difference between those two price points is what we call the confidence gap. It's not having the confidence to charge a higher price despite the fact that you are delivering higher value. The confidence gap, very important, really important. In some businesses, we've seen that as 10 or 20%. You know, we could put prices 10 or 20% higher. Customers love the value they deliver, and they're more than happy to pay that price. In other businesses, it's a smaller markup or smaller margin, but there's still potential. That's the target that we'd have in most of the projects that we're aiming for. So let's just move this diagram on a little. That gap we call the confidence gap is where we're underselling, we're losing profit because we don't have the confidence to charge the right price. What are our options now in this post-pandemic period? Well, we could just whack our prices up. We could just say, leave the value where it is, do exactly what you're doing at the moment, put the prices up to a 10, charge a premium price, and therefore we would make a short-term profit opportunity. Now that does exist. I've got many businesses I'm talking to right now, particularly in the construction, leisure and tourism. You know, if you run a hotel in Cornwall, I wouldn't say you can charge what you like, but you can certainly charge more than you would otherwise have charged because demand is so high that you could almost get away with anything. So there is this short-term opportunity to charge premium pricing, even if the value of the product or service you deliver does not move. There is pent-up demand in most marketplaces. So construction, we're finding shortage of supply of products. Getting hold of a good tradesman is like gold dust these days. In leisure tourism, as we said, there's huge demand. In most marketplaces, there is available spending. There's money to spend, demand is there, and therefore we do have this short-term opportunity to exploit that. The risk, of course, is if we do exploit that, will those customers vote with their feet in the medium term? If we rip off a customer this summer and charge premium prices in our hotels and bars and restaurants, will they return next summer? And that's a challenge. Would I advise you do that? Only if you are in financial distress. Because if you're in financial distress, you're not so worried about next season, you're worried about now, and premium prices will generate enough profits to get you out of that hole. Then you've got to go back and repair any damage by your opportunism. If you're not in a distressed situation, I just aim to push your price to reflect the value that you're actually delivering at the moment. So what should we do now? I think we could still push the value up. We could move from value 8 to value 9. So let's try and do things better. Let's try and improve our service quality at the same time as we're trying to get a slightly higher price. Because when you look at the scale of that box, the profit improvement potential for nudging your quality up by slight improvements in lots of areas, but charging a price that reflects that, that is where huge amounts of value is left on the table in most businesses we talk to. So a good business right now should be aiming to improve quality and service and move your value point higher up. So get a price that reflects the value and service that you're delivering, and then you will make significantly more profit than you would otherwise make. Now, if you put your prices up, that isn't going to hoover up tons of that market opportunity that exists. We don't want that. We don't want high volume, low profit customers. We want premium customers in those first, second, and possibly third price tiers where we can make decent margins for delivering really good quality service. Let's just simplify that diagram into more principles. Again, above the line is underpriced, below the line is overpriced. And as you move away from that optimal line, you get into a danger zone. Above the line, the danger zone is that your profit margins are too low, you grow too quickly. That is that classic overtrading where people run out of money with rapid growth. That is a real problem. Almost as many businesses fail in the recovery period of recession, excuse me, almost as many businesses fail recovering than do going into or during a recessionary period. So be very careful about rapid growth on lean margins. The other side of the line, the danger is if you charge premium prices and you're not delivering premium service, then you will lose customers in the medium to long term. Again, as I said just now, distressed businesses, that may be a good strategy. For other businesses, that is risking all the hard work you put in previous years, decades, by being too aggressive on pricing just because that opportunity currently exists. What we're aiming for is to be just above that optimum line. So 9 out of 10 on service and quality, 8.5 out of 10 on price, 7 out of 10 on service and quality, 6.5 on price, just above that optimum line where we're getting pretty much happy customers. They're getting more value than they're paying for, but we're making almost the maximum profit we can out of those people. That's our target zone that we should be aiming for. And again, one of the things we find with lots of businesses, they don't do any of this kind of analysis. They don't know where they are on those price points. They don't talk to their customers about the value perception they have of the products or services they deliver. They don't know that information to be able to make informed judgments about where they are and where they need to be and how they're going to get there on that diagram. Thank you for your time. I appreciate you've taken time out of your day to listen today. I hope you found it useful. There are my contact details on screen. If you buy my book, pick up the phone. I always have time to talk to people about pricing. So thank you for your time today.